Good morning, it's Wednesday the 26th of February. I'm Grady Wolf, market analyst with Bell Direct. Over in the US on Tuesday, Wall Street closed mostly lower following the release of most recent consumer confidence survey that came in much weaker than expected. The S&P 500 fell 0.47% for its fourth consecutive losing session, while the Nasdaq declined 1.35% on Tuesday, but the Dow Jones ended the session up 0.37%. Escalating trade tensions also weighing on investor sentiment at the moment and contributing to market uncertainty as investors weigh up the impacts of Trump's tariffs on Mexico and Canada, which are said to be imposed next week. In Europe overnight, markets closed mixed in the region as corporate earnings and defence spend in the region remains a key focus for investors. The STOXX 600 rose 0.15%, Germany's DAX lost 0.13%, the French CAC fell 0.49%, and in the UK, the FTSE 100 ended the day up 0.11%. Across the APAC region on Tuesday, markets closed lower as investors await the full impact of Trump tariffs on the region. Japan's Nikkei lost 1%, South Korea's Kospi index lost 0.57% after South Korea's central bank unexpectedly cut rates in a bid to stimulate the slowing economy, and Hong Kong's Seng lost 1.32% on Tuesday. The local market reversed Monday's gain to close 0.68% lower on Tuesday as a sharp sell-off in tech and discretionary stocks, or the rate-sensitive sectors, offset gains among utilities and staples stocks. Investors have been very reactive to reporting season updates recently, whilst also keeping an eye on valuations and movements out of the US, especially on the tariffs front. We had a slew of corporate earnings results out yesterday that sparked very mixed reactions among investors, with sharp rises and falls reported in key share prices. Domino's Pizza shares tumbled over 10% after the leading global pizza maker swung to a loss in the first half amid $116 million in one-off store closure-related costs due to the company closing 205 loss-making stores. John's Ling Group was the worst performer yesterday, shedding over a quarter of its value, with the share price plummeting over 30% after the company downgraded group earnings guidance for FY25. The building and restoration services provider across Australia and the US faced a challenging operating environment in the first half, especially in Australia, with benign weather conditions reducing the volume of insurance claims, while the US had project commencement delays impacting performance for John's Ling's Group. And on the other hand, 2024 market darling Zipco soared 14% yesterday on impressive first half results, including total transaction value up 23.9% to $6.2 billion. Lower bad debts were reported, cash earnings more than doubled, the company increased growth in the US market, and they also launched into personal loans market in January. A big first half for Zip there. On the commodities front this morning, oil is trading 2.7% lower at $68.83 a barrel. Gold is down 1.58% at $2,903 an ounce, and iron ore is up 0.06% at $107.19 a tonne. Ahead of the midweek trading session here in Australia, the SPI futures are anticipating the ASX will open the day down 0.3%, tracking global turbulence on markets overnight. The Australian dollar has slightly weakened against the greenback overnight to buy 63.33 US cents, 94.39 Japanese yen, 50.16 British pence, and 1 New Zealand dollar and 11 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has slightly decreased a 12-month price target on Adairs from $2.85 to $2.65, but maintain a buy rating on the leading furniture retailer following the release of the company's first half results, including revenue growth of 6.6%, which was a good improvement from the last trading update. However, the company's focus on furniture brand continues to weigh on results. And Trading Central has identified a bearish signal on Praemium following the formation of a pattern over a period of 23 days, which is roughly the same amount of time the share price may fall from the close of 78 cents per share to the range of 73 to 75 cents per share, according to standard principles of technical analysis. And that's all we have time for this Wednesday morning. Have a wonderful day and happy investing.